Good morning and welcome to this Wednesday, July 8th, 2020 edition of Trading Places Live at EarningsBeats.com. I'm Tom Boley, Chief Market Strategist here at EarningsBeats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Well, we saw a little bit of a sell-off yesterday, especially later in the day. Gave back a lot of gains on the NASDAQ. Dow was down a few hundred points. Today, it looks like we're going to get off to a little bit of a solid open, particularly again on the NASDAQ. We'll get into all that in just a couple minutes. First, for those of you maybe who are not currently EarningsBeats subscribers, just want to point out you can go to EarningsBeats.com and you can sign up for our free EarningsBeats Digest. Comes out Mondays, Wednesdays, and Fridays in the morning usually prior to the market open. Just simply type in your name, email address, hit the subscribe button, and you'll be good to go. All right, let's jump into what happened on Tuesday. You can see the Dow Jones Industrial Average down almost 400 points, the S&P 500 down 34, so both down more than 1%. The NASDAQ was also down more than 1%. It was actually up into record high territory, though, earlier in the day, and then we got some selling late in the day in the afternoon that really took the market down. Mid caps down almost 2%, small caps were down 2%. And then these were the 5 worst performing sectors on the day. So you can see energy again leading to the downside. I mean, the first 4 here, these are all familiar faces. When the pandemic set in back in March, and really since then, these have been 4 of the worst performing groups, especially on a relative basis. But energy down more than 3% yesterday, financials 2%. Industrials almost 2%, and real estate 1.6%. Consumer discretionary, which had been very strong of late, was actually trying to break out. One of the things I had written about yesterday in the daily market report, I noticed both discretionary stocks and communication services, 2 of what I would say maybe are of the 4 strongest groups that have been leading the market. Both of them were up against some key resistance. You can see that here on the chart with the XLY. And so I just mentioned, if the NASDAQ 100 is going to continue to move higher, it's probably going to require a breakout on the part of the discretionary group. And we had barely broken out on communication services, but we had already rolled back over and we're starting to trade a little bit lower. And so I really felt like those 2 groups were going to need to lead if we were going to continue going higher on the NASDAQ. And instead, they both reversed, came back down. You can see discretionary finishing down that 1.57% on Tuesday. So, one other thing that didn't help us yesterday was the 10-year Treasury yield, which had dropped. This was down, I think, about 4 basis points, 3 or 4 basis points to 0.65%. Today, it is up slightly. Let's get a quick update, make sure we got the latest here. It's actually up, but less than 1 basis point. We really want to get this 10-year Treasury yield going. Anytime we get the 10-year Treasury yield moving to the upside, and I talked about this a little bit the other night in my second half outlook, but when you get the 10-year Treasury yield moving up, it's simply an indication of rotation out of Treasuries, and that can help fuel a pretty significant market advance. It's been impressive that the stock market, especially the NASDAQ's gone up as much as it has without really much rotation out of Treasuries. So if you're looking for, I've said I'm feeling pretty bullish about the next several years. And if you're looking for a catalyst to drive equity prices higher, it would be money coming out of Treasuries. It would be the rotation back into stocks and out of Treasuries. We haven't really seen that yet. No economic reports of any substance out today. Don't expect much of an impact there. So overall, I think probably we're just going to sit in a pretty tight trading range, I would think, on the 10-year Treasury yield without any news. All right, let's keep moving on. I want to talk a little bit. I always do this talking technically segment. I just want to point out truckers. Of all of the industry groups in the industrial sector, truckers were the only one, trucking was the only one that was up yesterday among the industrial industry groups. So, and if you look, this has been a really strong group for the past, really since early March throughout this pandemic. Why would truckers be going up during a pandemic, during a period when a lot of folks were thinking the market was doomed? I I think Wall Street was looking at this a little differently and felt like maybe the pandemic was not going to be as bad economically as a lot of people feared, and that Wall Street was looking for a V bottom or a V recovery. And I think in many ways that's what we're seeing so far. But truckers continue to push higher on a relative basis. This, by the way, is relative to the S&P 500. So, and when you're seeing it moving up, it doesn't mean that the group is necessarily moving up. It's just that it's outperforming the S&P 500. And that always interests me. I want to know what is outperforming the S&P 500. I want to know what's got relative momentum. And the way you can tell relative momentum is looking at this PPO. When you've got a relative chart and you're looking at the PPO, this is the relative momentum. This is not the momentum of the trucking group. I mean, when you look back here, you can see the truckers absolutely, on an absolute basis, were going down back in February and March. But the relative strength and the PPO were going up. The relative PPO, I should say. So that's important. Seeing a relative PPO at plus 3, that's a pretty good sign of strong momentum in the group. Also seeing the relative price action above the 20-week relative EMA and the 50-week relative SMA. That is also great setup. So truckers look really good. And when I get to the 3 you must see at the end of the show today, I've got 3 truckers that I want you to take a look at. So one other chart here on the truckers, and then I want to get into show you a little scanning. Here is a daily chart. You can see we got up to a double top here late May, early June. We just recently broke out above it. That's all good news. I mean, I think we look pretty good here. We did get close to the 50-day moving average, very close to this breakout level before turning back to the upside. And now as we're breaking out, you can see the PPO beginning to turn back up. So I think on the daily chart, this group looks pretty good. And I would also point you back to February and March when we had this huge decline in price. Notice that after the initial push to the downside here in the accumulation distribution line, as we kept going lower and lower, we had higher lows. And this was a hallmark. One of the things that we were looking at Invested Central back in March and April was, companies and industry groups that were selling off at the open, but then were showing a lot of demand throughout the trading day. And that's how you get an AD line to go up while prices go down. So that was a pretty good sign. And you can see since then, as a result, we've been trending higher. I think that this is one of those groups that was being accumulated back in March and April, and it now is being reflected in higher prices, 52-week highs. The other thing I think is pretty interesting, look at this weekly chart. Truckers were going up 16, 17, and 18, but after we topped in January of 18, essentially we went sideways here for 2.5 years. And we did go up a little higher here in September of 2018, came down, looked like maybe we had a false breakdown here back in March of 2020, and then moved back up. But when we got through this 910, 915 area, we went back down, tested it. And now instead of, when you're in a trendless market, what you see is a lot of movement below and above moving averages. You just never get anything going. So as soon as you get above, then you weaken, you go back down below, but then you come right back up above. And look at the PPO, below the center line, above the center line, below the center line, above the center line. That's not a trending. This is not a trending chart. This was sideways consolidation. But look at what's going on now. Since bottoming back in March and coming back up and clearing this overhead resistance, now we move up, we pull back, we hold the 20-day, and we break to a new high. That was different for the most part than what we had seen before. And when we did see it before, like in here, second half of 2019, we were trending higher, holding the 20-day. We hadn't broken out. So we never cleared resistance. So yes, we were trending higher, but we were doing so within a sideways consolidation period. And you can see we ended up breaking back down. We never broke out. This is different. We now have broken out, pulled back, held the rising 20-day, and broken out again. PPO pointing straight up. And this is what people ask me sometimes, what do you mean by pointing straight up? Well, setting a new high. It's accelerating. Look at the 20-week pulling away from the 50-week. These are signs of increasing momentum to the upside, increasing price momentum. So I think truckers actually look pretty good. And again, we'll talk about 3 of those at the end of the show today. All right, I wanted to get into scanning, and I want to just show you a tip if you're not familiar with this. If you go into, well, first of all, if you're in your dashboard and you go down and you don't see your scans, then it probably means over here on this little gear shift, you don't have scans and alerts checked. If you've got all of this checked, then it'll show up on your dashboard, okay? So make sure you have that scans and alerts checked. If you do, you should be able to scroll down and see your scans, okay? So over under this More button, if you click on this, you get predefined scans. So we could run some scans. Here's new 52-week high. You can go through the whole list. There's a lot of predefined scans. I actually like their candlestick pattern scans sometimes. Something like if I was looking to go long, maybe the hammers. There were only 4 on the NASDAQ. But, you know, something like that, or maybe a filled black, well, hollow red candle might be a bottom on, you know, after a stock's been in a downtrend. So maybe use the hollow red candle, 186 there. And actually, this is a tip for EarningsBeats members, but you could actually take this. I'm going to go ahead and pull this up. See this little click here to edit this scan? Maybe we can do this. All right, so click here. Now, I'm not interested, if I'm going to run a scan against a chart list, then I don't have to worry about putting type equal stock because that's all I have in my chart list is stock. I don't have to worry about the exchange because I've already put the stocks in there that I want. OTCB, none of this matters. So I can get rid of all of this and just start with that. Actually, I don't even need the moving average or the total volume because the volume doesn't matter to me because stocks wouldn't be on my chart list if I didn't have volume. So now here's the setting for a hollow red candle. This is all you have to do. In the bracket, right, type in daily hollow red candle equals 1, okay? Now, I don't know if this is going to return anything. I'm going to go back over here for a second, go back to the dashboard. I have my own scans, and also some of these scans I have over at EarningsBeats for our members. But one of the scans I like to run is this downtrend reversal scan. And so if I edit it, this is how it shows up. So what I could do here is simply copy this. This is essentially what this is it's telling me that the high, actually with a red hollow candle, this might not work. So actually what I'm going to want to do, see this first one says daily high is greater than yesterday's daily high. Well, if you have a red hollow candle, you're gapping down and you're coming back up and you're still finishing in the red, but you have a hollow candle where you're closing above your open. So I think what I'd have to do is get rid of this first clause here. But essentially the rest of this is just telling me that the highs have been going down for 5 days in a row. So yesterday's daily high was less than the high 2 days ago. 2 days ago, daily high was less than 3 days ago, daily high. 3 days ago, and so forth, all the way back to 5 days ago versus 6 days ago, daily high, that they're constantly going down, down, down. Now, what would happen if we added this to the red hollow candle? So I'm just going to take this and copy it. I've never done this before, by the way, so I'm just going to see. And then I'm going to need and clause, and then paste. Okay, so now what I'm doing is saying, okay, I've got 5 days in a row where I've had lower daily highs, and now I'm getting a hollow red candle. Now, the scan, that predefined scan that was showing, I think it showed 755 stocks. Well, that's going to be any stock that has a hollow red candle. That doesn't mean it's a meaningful hollow red candle. I think if you get a hollow red candle and you have this downtrend 5 days in a row, this would be pretty, I think it would be pretty important. So let's do a check syntax on this, make sure that it's okay. All right, scan syntax is all right. And now, well, actually, I wanted to add a chart list too. Actually, I'm not even going to add a chart list. Let's just run it against the overall market and see what comes back. 11 entries. Now, before I even look, what should happen and what should be coming through here, it is bringing up over the counter, remember, because I said I was going to do it against our chart list, but I didn't. So it's looking at everything in the market. So you're getting London Stock Exchange, you're getting over the counter, you're getting things that I wouldn't necessarily want. But there's only 11 on here, so it'd be pretty easy to look at. Now, one thing that I would be interested in is looking for high scooters, because high scooters tell you you've got pretty good relative strength, but it's a stock that's been down 5 days in a row and now has a red hollow candle. That could be pretty meaningful. So the first one, just looking at this, the first one that really jumps out to me is Cloudera, and it's in software, which has been one of the strongest groups. Now, I haven't looked at the chart, no idea what this looks like, but let's take a look. And I'm not sure why this doesn't, oh, it should have okay, it closed at 1185. The open was 1181, so it did close above the open. It didn't look like a hollow candle, but if we shorten this down to maybe a month, it probably will come out a little clearer. Yeah, it's just barely hollow because you're closing 4 cents above your open. But this is a stock that's been down 5 days in a row. And notice this is about where we turned before. Buyers came in with increasing volume from about this 1185 area. And I can tell you exactly where it was. The low was 1184, gapped up the next day to 1204, and we were up to 13 and change. I don't know that we're going to have a repeat, but we've been going down for 5 days in a row. If you don't want to chase Tesla because it's been going up 5 days in a row and it's up $400 or $500 in the last few days, how about a stock like Cloudera? You know, this is a pretty good looking stock. I'm going to pull this back up on a daily basis first. So, I mean, it's been moving up very significantly, but it's pulled back down to a key support area. Now, is it going to go back to the 50-day? I mean, it's possible, but the stock was up $14 2-3 weeks ago, and now it's sitting at 1185. Maybe it's just one of these things where you build up a little bit of, you know, you just slowly build a position. If it keeps going lower, maybe you add a little bit, figure out a plan down to the 50-day moving average. But the fact that it's been down 5-6 days in a row now, off of the recent high at 1380, this tells me 1185 might be a much better area. So my point here is that, you know, we could go back from that predefined scan, and, you know, stock charts will help us in terms of, here was that, the hollow red candle was actually 186. Maybe it was just the NASDAQ that I pulled up. I think 700 and something was the, where was this one? Yeah, 760. That's the total. 186 was just the NASDAQ. So the only thing I had there were NASDAQ stocks. But my point here is that you can use these predefined scans and then look to see what the wording is. So for a 52-week high, for instance, you know, you click here, look at the scan. All right, well, there's the scan, stock, NASDAQ. Now this time what I am going to do is I'm going to get rid of everything except the wording for that actual 52-week high. Daily high is greater than yesterday's daily max. That's the critical thing you need to remember if you're talking about a 52-week high or the max. You could have 20 days. So this would be a 20-day high. Yesterday's daily max for 20 days, daily high. So it doesn't have to be 253. You could put in here 419 if you want. You know, whatever the number of days. This is, you know, you can adjust these scans. But I'm going to leave that. What I'm going to do now is I'm going to go in, and this is the cool part at EarningsBeats, is we already have chart lists where I've got a chart list that tells me all the companies that I like technically that also have beaten Wall Street estimates in their latest quarter, top and bottom line. That's our strong earnings chart list. So if I pull that up and I add it, now what it's going to do is it's going to look at my strong earnings chart list for stocks that are showing 52-week high. Now that's going to pull up stocks like Tesla that have been going up every day. It's going to be very overbought. So another thing I could add, well, let me go ahead and run this first, and then we'll come back to this. So check syntax. We're good. Run the scan. And Scan results. Okay, so 39. But when I sort this on scooters, see how Tesla's at 99, Dexcom, Fastly, these are all eBay. These are all companies been going straight up. They're very overbought. So one way to maybe scan and then weed out some of those is to pull up a scooter. So you add a scooter, and right now the default says greater than 90, but how about we go less than 90? All right, now I'm going to check syntax, make sure we're good to go. We are. I'm going to run the scan again. So now we had 39 before, but if I just say give me scooters less than 90, now I'm down to 8. So I just went from 39 down to 8. And this was a scan similar to what I ran yesterday when I did the daily market report for EarningsBeats members. You'll see some of these stocks were actually on that list, some of these truckers I talked about. But you can pull these up and take a look at them. Look at Moody's. So Moody's is right up against a key resistance area. So intraday, it made a breakout. A move through 290, you know, or even yesterday's high at 287.99. So you get up in the 288s, that would be a pretty good sign, because we are taking out these prior highs from all the way back in February, breaking out. That's a little different, and we've been going sideways for most of the last 5 weeks or so. That's a little different than looking at a chart like Tesla, where we've been straight up now for 5 or 6 days, and you're looking at this saying, well, how in the heck can I get into this stock now? You know, you can, but, you know, and it might continue going straight up, but there's a lot of risk buying into Tesla at this level after it's already gone up 45% in just the last week, or maybe 6 trading days. And the time you want to get into a Tesla is when it's on the 20-day moving average. That's the best time. Right now, we're 300 and almost 320 points above the 20-day. So if we just went back and got a normal 20-day test and you bought at the current price, you'd be down 320 points, or about 25%. You know, so if you're going to get in at this level, you got to be thinking, well, what if I get a 20-day test? Am I okay holding this stock down 25%? Now, the 20-day will keep going up, so maybe it hits it a little bit higher, but let's say 20%. As a short-term trader, I don't want to be down 20% on a trade. So that's what makes it very difficult to use, you know, to just enter on any stock setting a 52-week high. I would rather go back and look at a stock like Moody's, which has been going sideways, just breaking out. Let's see if we get a little volume, a little push above 288, and then I can be a little bit more, and then even then maybe buy half. I mean, you got to make your own decisions what you want to do, but you could buy half. And if you get a stock that makes a breakout and comes back and tests its 20-day, that's also a good time. So if you buy half on a breakout, the rest of the plan might be, hey, if it pulls back to the 20-day, I'll get the other half. If it doesn't and keeps going higher, I'll just ride up half. I mean, making money on half of your positions better than not making money. All right, so anyway, just want to give you a couple scanning tips there. Let's take a look at some breakouts. So one breakout is air products and chemicals. Check out that move yesterday. Look at the volume. I like heavy volume breakouts. We cleared about 253, 254, which was the high back in February. That would be the first area on a pullback that I would be interested. I don't know that I would go chasing. Just like Tesla, the stock's been up, not on a percentage basis like Tesla, but it's been up 5 or 6 days. This is one I'd have on a watch list and just pull it up, you know, time to time. And if it's pulling back and hitting a key support level or getting close, maybe begin to build a position. Another breakout, how about LGIH? Look at this sideways consolidation, tops around 95. Look at yesterday, closed at 97. Look at the volume pickup, one that's just breaking out. So again, you're not necessarily looking at a stock like Tesla that's been going up day after day. VRNS, this is Varonis Systems, broken out. Now it's been up about 4 days after breaking out, but you can see clearly that prior high in February now is in the rear view mirror. PCRX, I do want to say, I think I saw this morning that they have a secondary public offering. They may be pricing it, or they may have announced it. I saw news, but I think this is the pharmaceutical that I saw the news on. So it might go down as a result of a secondary offering. But if it were to get all the way back down to about 48, 48.5. I think that would be an interesting potential entry point. Let's see, what else do we have? How about CRSP? This is a pretty volatile stock, but look at the last 4 days. Huge breakout. 75 is the breakout level, and that's where your 20-day moving average is. Might want to keep an eye on this one. How about FTFT? Those of you who like these small dollar stocks, I'm not really into them. I don't typically trade a stock this low, but lots of tops around this 130, 140 area, and we just broke out above it. Pull back into that 130 range. That could be an interesting entry into a smaller stock. Salesforce.com, CRM, finally making the breakout above that February high. So Salesforce starting to look much better. Alibaba also making a breakout above prior highs. This was January. Look at the volume that came in on Monday, pulled back yesterday. I think in the 232, 233 range, Alibaba looks pretty interesting. Maybe a second entry down to 20-day. All right. Actually, I'll mention one more. This is in the gold area, and I'm not a big gold fan, but hey, a breakout's a breakout. And if you like gold, this is a nice breakout going all the way back here. You can see the September high, which was at about 16, a little over 16, 16 and a half. Same thing in May, same thing in June. Well, now we've broken out pretty good volume. So any kind of a pullback to that 20-day or $17, in that range would look pretty interesting there. All right, let's move on to earnings spotlight. Just want to pull up a couple of earnings. Let's see, there were a couple of good ones in here. Well, before I show companies that actually have reported, one company raised their guidance, GNMK. I wanted to point this one out because if you're looking at it on a relative basis, first of all, look at this stock relative to the medical equipment group. It's clearly breaking out. It's one of the strongest medical equipment stocks out there. It's breaking out relative to the S&P 500. And you might think, well, wonder, what's going on here? Well, they came out this morning and they raised their revenue guidance from 31.4 million to 40.1 million. So what is that, a 30% increase in their revenue guidance? This is why companies move up. Wall Street has already talked to management. I guarantee you they know ahead of time that things are running well. They may not know the numbers, but they probably do know that, hey, we're feeling pretty good about our business. They meet with company management and they go back and they start buying companies like this. And then the company comes out and reports the news. It's just the way the market works. But GNMK I thought looked pretty good. Let's see. SMPL, Simple Foods, the Simple Food or Simply Good Foods company, making this breakout above $20 last couple of days. They reported, they beat on the top line, beat on the bottom line. They guided their fiscal year 20 revenues a bit lower, but earnings per share higher. And last time I looked, let's see here. If we pull this one up, pre-market, you can see we're actually up about 5%. So market reacting to that earnings number being revised higher. A couple of other companies that came out, we'll just show you, I'll show you the reaction here. Levi reported after the bell, I think yesterday, they missed big time on their revenues. Did beat on the bottom line and no guidance going forward, eliminated 700 jobs and the stock down 4% pre-market. Pull up the chart here. And if you look at this chart on a relative basis, wasn't particularly good news. Look at the stock relative to the clothing group. Look at the stock relative to the S&P 500. You see the difference between this and GNMK, which just came out and announced a revision on their revenues to the upside. Wall Street knows what's going on. You've got to follow relative strength. This is one of the biggest clues in the market. And then the last one I wanted to pull up was MSM. So MSM did beat top and bottom line, but the stock was right up against resistance, is falling back. I think if you get this stock back in the upper 60s, I would be a buyer. I mean, it's, like I said, beating top and bottom line. It's beat on the top line and bottom line. Both were pretty strong. Revenues, $835 million versus $774 million. And bottom line, $1.40 versus $1.20. So you look at this stock, pull it up on a relative basis. and versus the S&P 500 just set a new 52-week high. Relative to its peers, it's just been kind of so-so, but its peers have been very strong. So you got a pretty good stock, reported good numbers, but it was at resistance. It's pulling back. The 20-day may hold, or we may end up going back down to 67.5, but I think weakness is an opportunity here. All right, let's go into the 3 you must see, and then we'll wrap this thing up. First stock I wanted to pull up was JB Hunt. These are truckers. So I mentioned the truckers looking pretty good earlier in the show. Well, JB Hunt had a lot of overhead resistance around 120 to 122. Volume picked up yesterday and broke out to 124. Let's get that update and see what it's doing today. It's not showing anything quite yet today. Next up is Knight, KNX. This is Knight Swift Transportation. Also broke out above the high that we saw in mid-June, tacking on some additional gains so far today. And then probably what I would say is the best stock in this group is Old Dominion Freight, ODF or ODFL. And this one had already broken out a few days ago. Gapped up today, has pulled back a little bit. But when you look at the relative strength, versus the truckers, it's at a 52-week high. Versus the S&P, it's at a 52-week high. I think stock looks pretty good. 20-day test would be best entry. But these are 3 truckers that I wanted to show you after pointing out how well the truckers had been doing recently. And I pointed that out earlier in the show. All right, so let's take a look at what's going on here. We're a minute and a half, 2 minutes into the market open, and the Dow right now up 39, S&P up 8, NASDAQ 61, NASDAQ 166, seeing relative strength there again. Watch the VIX, see if the VIX breaks out to another high versus yesterday. If it does, we may be in for some short-term selling. And let's not forget, historically, while we're in a good period from June 28th to July 17th, we are in a very brief profit-taking period from July 7th to the 10th. Historically, calendar months, we tend to see a little bit of profit taking from the 7th to the 10th. And with today being the 8th, we're right in the middle of that. So it wouldn't be unusual. Certainly from a historical perspective, it would not be unusual to see a little selling here in the near term. All right, that is it for today. Let's go ahead and wrap it up. Wish everybody a great day. Happy trading. And I'll be back over at Stock Charts TV tomorrow morning at 9 a.m. for another edition of Trading Places Live. Take care, everybody.